Chinese researchers are talking about concerns over U.S. debt holding, U.S. Treasury holdings in China. They talk about the worries of the viability of U.S. dollar assets. Now, these researchers are from the Bank of China. For people who don't know, the People's Bank of China is essentially the state-owned bank in China. They said their expansion, U.S. Treasuries, in China, while they haven't reached default, they are unsustainable. For 3 consecutive months, China has been trimming this holding of U.S. Treasuries, and the uncertainty of tariff reforms in U.S. dollar credibility crisis could heighten the volatility of the U.S. Treasury market. So this has been a huge development that's only getting worse the more and more that the current U.S. administration and even and prior ones before it have been pushing hard, not only against China, but really the entire world economically.
Well, it wasn't that many years ago that the official number given for the Chinese holdings of U.S. Treasuries was over $1 trillion. So that since we're now in the 700, 800 range, it's clear that not only in the last 3 months, but for some years now, the trend is clearly down. Sometimes it levels off for a while for whatever complicated reasons. But clearly, the Chinese government, the Chinese authorities in the Chinese bank want to reduce their exposure to U.S. dollars. And one can speculate all one wants around it. There are usually multiple reasons. But among them, no question at all, is the fact that the United States' indebtedness, and let's remember, the United States is the largest debtor country in the world, has been a problem for quite some time. And the recent budget, the so-called big, beautiful bill that Mr. Trump and his Republican Congress passed, makes all that worse. It continues trillion-dollar deficits basically into the indefinite future, and we're already at a very high debt level in terms of the history of the United States, in terms of the ratio between the national debt and the GDP. However you look at this, and there are multiple ways, many people in China, but also many people around the world, including here in the United States, believe with the Bank of China that this level of indebtedness, not even speaking of the growth, this level of growth of the deficits and the debts that result from the deficits, is quote unquote unsustainable. Now that's a funny word because it doesn't tell you all that much. It's a prediction about the future, and we know what those are worth when any of us does that. So, yeah, you probably can't sustain this, but no one knows for how long you can, because that immediately forces you to ask, look how long they have, in fact, sustained it. The United States has been a deficit country now for quite a while, and its debts around the world have grown quite a while. Countries around the world accumulate dollars. They're willing to do it. The United States, in case people don't understand it, gets enormous, let me underscore the word enormous benefits by having the dollar be the global currency. Just to give you one example, it is difficult in all countries to fight wars. But it is always more difficult if you tax your people to pay for the war. If you want to see support for a war disappear in terms of popularity, just try paying for it with taxes. So what you do instead is borrow so that you don't have to tax your people. The borrowing is a much more, how shall I put it, pleasurable way for politicians to cover the costs. And if the whole world is willing to lend you money, which has been the case, then the United States can be the world's police person or military, the way we talk about, and you talk about on your program a great deal, in part because of the reserve position of the dollar, of the fact that the world has been willing to lend. But as with all things like this, eventually, if you keep doing it, you will destroy it. You will overdo it. And that's the issue that really is coming to the fore now. The world's owners of American debt, and just to remind, the single largest creditor of the United States is is Japan. The second is China. The third is Britain. Okay, all of them and the many others that hold American debt are very worried by the level of debt being added to all the time, because that's the way the Republicans and the Democrats resolve their contradictions. It's a very bizarre dysfunction of American capitalism that our political leaders, Democrats supporting public spending, roughly speaking, Republicans supporting no taxes for corporations and the rich. How do you resolve, if you're not going to tax the corporations and the rich, to pay for the spending that you better do, or else you'll lose the people's support? The solution? You go to the corporations and the rich and you say, on condition of not taxing you, which we won't, you have to lend us the money we would have taxed from you if we had the courage to tax you. We don't, in America, there is no courage politically, so they don't tax corporations and the rich. They keep cutting the taxes, as they did a few weeks ago, again under Mr. Trump, having done it in his first presidency back in 2017. And so they borrow instead from the corporations and the rich. We call that public finance, but it is a corrupt hustle if you're honest. Well, that then has this side effect of making us a debtor country. We're borrowing forever. And now the terrible fear, which is always there in every creditor for thousands of years. I want to lend. I'm making a lot of money by lending, but I've got to be careful not to lend to whoever borrows from me if there's a chance they won't pay it back. Well, the United States, being the dominant country, has been able to shoo that away. Oh, of course, we will never default. But smart politicians, which exist in China and everywhere else, understand that at a certain point, it won't be up to the politicians. There will be a groundswell from below, and then it will force the hand. And the politicians, having no courage, can't face their own people, will start cutting back, paying off their creditors. And you don't want to be holding the US Treasury when that moment happens, whether you're the Chinese bank or the Japanese authorities or anyone else. That's where we are. It is so serious that there is now public conversation and the action. The Chinese are not alone. Others have also been paring their holdings of the dollar. There's still, you can still borrow. I don't want to overstate this, but we haven't had this kind of discussion before, and it tells you that we are coming toward the end of this game that has been played at least since the United States went off the gold standard in 1971.
They said, this is just straight up, we need to gradually adjust Treasury holdings and appropriately increase reserves of gold, key resources in minerals. So, Sean, talk about the significance of this. What does it mean? Why is it happening?
Right. I think to Richard's point, right, he's exactly right. The US debt has now reached an unsustainable trajectory. Now, I think just recently, the interest on the debt alone, just the interest, we don't even need to talk about the capital, it's around $1 trillion. And we still have 2 to 3 months to go for the fiscal year. So it's going to hit 1.2 or 1.3 trillion. Now, the problem with this situation is that China understands that there are two negatives in holding US bonds, US debt, US treasuries, whatever you want to call it, right? Now, the first thing is the fiscal situation and the fate of the dollar. The strength of the dollar is likely going to crash, likely going to go lower over the next few months, maybe even the next few years. And we need to understand why, right? Now, I think the trade war really sent the dollar into a doom spiral. Because let's say you're the exporter or country that you want to shift your industries to the United States for some reason, whatever the reason is, you will need guarantees from the Trump administration and the administrations going forward. And the most important guarantee you need is for the tariffs to stay. It doesn't make sense if the tariffs, let's say for steel, aluminum, or for cars, let's say it's around 30 to 50%. Within the next 4 years, it suddenly goes away. Well, you're going to be the big loser, right? You look like an idiot if you build a factory for a few $1 billion. You want the tariffs to stay as someone who's going to shift their industries there. But here comes the crux. The US doesn't have robust supply chains, labor is too expensive, which means in order to keep these tariffs going, they will need to print money, they will need to borrow money, and they will need to subsidize their industries going forward. Now, if you think about this from a really technical standpoint, that means they're going to issue a lot more bonds going forward. They're going to flood the market with treasuries. And it really doesn't matter if they issue bonds on the short end, whether it's 3 months all the way to the 1 year, or whether it's 10 to 20 years bonds, which we all kind of know it's going to be quite impossible, because if they do it, they will blow up the entire market. And a lot of people have a pushback that, hey, Trump is going to send his goon squad into the Federal Reserve. He and his henchmen, they got to kick power out, and they're going to slam the rates down all the way to 2%, 1%, and 0%. Now, sure, that might lower borrowing costs for the immediate future, but we've got to understand at the end of the day, the entire market runs on supply and demand. There comes a limit, as Professor Wolff said, that you flood the market with so much dollars, so much bonds, you borrow so much dollars in the world, it will come to a point that the world just don't have enough dollars to lend you. So rates goes up, and that destabilizes the entire US economy. And every time that happens, whether it's 2008, 2020, the US will be forced to a corner, and they'll be forced to print money, or else the entire economy collapses. Now, China understands this. So if that's the case, why do you want to hold the dollar bonds, which are denominated in dollar? That's the underlying asset. It's going to lose value, right? It really doesn't make sense. So let's say 10-year bond yields 4 to 5%, right? Somewhere around there. And the strength of the dollar drops another 10 to 20%. Well, you'll be losing 5 years of return. Plus, China also understands that US assets can be weaponized against them. Now, if we look at, for example, the recent talk between Trump and Putin, a lot of things were said. But one thing I was trying to get notified on, or really put my ear to the ground, was what is going to happen to the fate of the Russian assets, right? Around 200 to 300 billion dollars was seized by the Europeans and the Americans, and we have not really heard a whisper about it. And if this really continues, China understands that, hey, Russia lost $300 billion, but we have 750 to around $900 billion stuck in the American system. So now they are juggling with two big conundrums. Our money can be taken away, and it can be used to weaponize against. It will be weaponized against us, and that can be used to beef up the U.S. military. That can be used to subsidize U.S. industries, and that can be used in all sorts of ways that we haven't really thought about it. It could even be building bases around the world to kind of encircle China a bit more. There's a possibility. And on the very direct side, why would you want to buy billions, hundreds of billions of bonds to subsidize Trump's trade war against you, right? Money is fungible. I mean, it's really incredulous. You just look at the situation, let's say, for example, in chips. The US wants to impose a 30% tariff on chips because they want to deny China the ability to get chips from, Korea, Taiwan, shift everything to the US. Now, how is Trump going to fund this fantasy idea? He has to borrow money. And does the Chinese want to fund their own containment of the tech war? Now, I find it highly implausible, and I don't think that's going to happen. So that's why we are seeing, all the Chinese economists, all the people in the banks, they're all writing this, because they know that at the end of the day, why would you want to fund your adversary? It fundamentally doesn't make sense.
We've been being told in recent days, the dollar is up, dollar is up. They want you to look at almost like day by day how it's going. But even day by day, it's often falling, and it's falling quite a lot. So this was just over the weekend. It's the dollar index fell by quite a lot, by almost 0.5%. What do you make of the broader significance then of the decline and what seems to be the eventual collapse of what we call dollar hegemony, the hegemony of the dollar as the reserve currency, given as what Chinese researchers at the Bank of China are calling this credibility crisis?
Well, I think what the Chinese authorities do, which authorities everywhere do, is weigh all these different factors. Sean nicely goes through a bunch of the very important ones, and they weigh them. They don't all point in the same direction. Otherwise, the weighing would be, you wouldn't need to. If they all point in doing X, you'd do X. But some of them point in direction X and others in direction Y. Let me give you an example from the United States. The benefit of the United States in having China subsidize American domestic and foreign policy by picking up, hundreds of billions of dollars of American debt is offset by the fact, which, by the way, is carefully not spoken about in the United States, that if you are China and you own whatever it is, let's say $700 or $800 billion of American debt, that the American government is required to pay interest on that debt. And if the interest is 5%, let's say, and if it is $800 billion that China owns, then $40 billion a year is collected in taxes by the United States government. It is not used for American military. It's not used to maintain the roads or to help the students or whatever else the government does. The government functions merely as a collection agency and ships those $40 billion of taxpayer money to Beijing. That's Chinese interest on the debt of the United States, which the Chinese are free to use in any way they see fit, which I'm sure they do. But the United States does that, tries to keep it from its own people, because every time I explain this to an American audience, I can assure you the looks I get are the looks of people who have just discovered that, the sky is blue or something. It's extraordinary. But it's the weighing of the American government, which understands this, that the benefit of China buying the debt is greater than the loss, if you like, of the $40 billion that goes to subsidize China rather than the United States. And they are equally concerned now because they don't want the Chinese to unload in a short period of time significant parts of that debt, because that would crash the price of those bonds. And as we all know, that would raise interest rates. And China's a big enough player that this would be all kinds of problem around the world, would be as destabilizing of the world economy as almost anything else you could think of. So that has to be managed as well. So for me, I see them, the Americans in their way, but the Chinese authorities also in their way, as caught in a web of complicated relationships. And I think Mr. Trump, in his frustration, and of course I speak for the forces behind him, not him as an individual, he doesn't matter, but the forces behind him, in their frustration at being caught, and being caught at a time when the American empire and system is clearly declining, and the Chinese, not empire, but system is rising. The whole world can see that, Americans too. It's very painful to live in that frustration and then they act impulsively. That's what these tariffs are about and the sanctions are about. And they are in the process of discovering when you suddenly destabilize all these webs, it is impossible to know how that works out. And it can just as likely work out at your expense, that would be the American expense, as that of anybody else. And that horrible fear is what can't be spoken in the United States.
I think it can be difficult for especially ordinary people in the West, in the United States in particular, to understand it. So how do you understand this just the ongoing trend? And it's not stopping, despite what the mainstream kind of market watchers and economic analysts try to tell us, that it's only this month, it's only today, yesterday, right? But it seems like this is happening. And I know you recently covered how it's been going on for all of 2025 so far.
Yeah, but I think the dollar has the curse, and it's a curse and a gift of the reserve currency status, right? Post World War II, when the US was very rich, when Europe, especially the UK, were in shambles, they were able to propagate the power of the dollar because the US was a manufacturing economy then, and they parlayed it into the petrodollar system where the whole world had to use dollars to get oil. And because of that, the US had near sheer dominance for the last 40 to 50 years, right? That part is undisputed. But when the entire US economy is faltering, when the entire trading system is cracking, when the entire financial system is losing trust, we are looking at a great unwinding of the entire dollar system, right? So let's just use the US consumer and just use trade, for example. Now, the US consumer, they are subsidized by the US government. A lot of government spending is buying foreign goods. But right now, we are reaching a point where the government, they are reaching a point that they can't really spend. The US consumers, they are facing high inflation. Inflation expectations are going up. They are spending less as well. So what are we really seeing going on a really technical basis, right? Well, they're not really importing a lot of goods from the world. Imports are starting to fall, and they're buying more overpriced US goods. So a lot of money is being circulated within the US economy. And when you have basically so much supply going on and the demand isn't really there to spend, it just lowers the strength of the dollar. And that's just going on within the United States itself. They're spending so much money on healthcare, which is necessary, but then they are waging a lot of foreign adventures around the world, which is just injecting more money, more bonds, more debt into the system. And everyone's really feeling the pain. They say inflation is just 3% a year. I don't really believe it. I think it's at least double or even triple, right? I have friends in America. Ask them how stuff in Target and Walmart, they tell me it's horrendous. They are facing double-digit inflation. And when we look at the financial side, it is just horrible as well. Now, let's understand that around 25%, 26% of US bonds are being held by foreigners out there. It's being held by people in Asia, it's being held by people, some people in China, the Middle East, especially those in Europe. And it comes back to the fundamental idea of the underlying asset, which is the dollar losing value. And because the entire world is built on US bonds, and US bonds is supporting the dollar itself, obviously to buy bonds, you need to buy dollars. And when there's no demand for bonds, the demand for dollars also goes down. So we are having really two tsunamis crashing onto the entire dollar system. Domestic demand in the US is weak. Too much dollars to be flooded back within the system itself. And that's why, the prices are going up. Standard of living within the United States is dropping. And within the financial side, when you look at people on Wall Street, when you look at other investors out there, holding the dollar is a hot potato. No one wants to hold bonds. Right now, I personally, as investor, I have 0 US bonds in my portfolio. I see no point. Why should I hold it when I believe within the next 5 to 10 years it's going to lose value? I'd rather buy gold, I'd rather buy other stuff right now. So I think the US is really being buffeted by these two tsunamis hitting them. And the curse of the reserve currency is now boomeranging back on them.